Oh, were you waiting for this as long as I was? Sometimes my office guys tend to play tricks. But anyways, good morning to all of you and thanks for tuning in to the trade setup. Let me just pull it up. Yes. So how are we set for today? That's the key question, isn't it? The US markets had a fairly decent outing yesterday. I would just first quickly, let's just run through the numbers and what the US markets did in yesterday's session. So as you can see, an uptick from the lows of the day, which is actually a pretty good sign. And there is this chart on the Bloomberg terminal, which is there on our website story as well, which shows how the call to put ratio and the levels that it is at actually indicates the most bullish bet that the markets have had in a number of years, if you will, if not just quarters. And that just shows you that the insti investor, because I'm presuming that options trading is largely an insti investor's game, the insti investor is a lot more bullish on the US markets than what we would like to believe. Let's wait and watch, of course, how it shapes up. It's an important week, this one, remember, viewers, because ECB comes out with its stimulus announcements tomorrow. There's also this whole belief about whether the US stimulus will come in before the Congress takes a break. So all of that will be in focus, but let's wait and watch if that shapes up well. Asia, the last time I checked, the SGX Nifty, the last time I checked, were all doing reasonably okay for themselves. So about 1% higher for HSI, Kospi is doing well, ASX was doing well, Straits Times was doing well, and the SGX Nifty, that when I checked, was up about 0.3%. So the start will be good. The question is, can it sustain? And the question is, will your portfolios participate? That's the key thing, isn't it? Well, about 1/3%, as I said, the SGX Nifty is indicating. Now, the trade setup, frankly, if you look at it, and you would think that yesterday the markets were up, but a lot of portfolios got smashed simply because yesterday, on the index at least, it was Reliance and IT which propped up an otherwise lackluster session. Frankly, the large cap space was devoid of activity, but for the fact that Reliance, IT, to an extent Ultratech, were in the green. But otherwise, large caps didn't have too much of action. But the broader end of the spectrum was active, and how? Canara Bank QIP sparked up the PSU lenders, strong gains with very strong volumes, and I'll come to that in a bit. Pharma took a breather yesterday, but I think that the uptrend looks very strong for the time being. So I doubt that these dips will be sold. If anything, these dips in pharma are likely to be bought into. At least that's what the dealer desk seem to suggest, and that's what just studying pharma over the last few quarters or months seems to suggest as well. I think the only unnerving factor for me is the nature of the mid cap and the small cap stocks rallying. Now, there will be reasons for this, of course, but when a JP Power, and of course, I know there's a lot of talk about the book value being so high, etc. But when stocks of that nature or some of the others move up 10, 15, 20%, 2 days, 3 days on a trot, that somehow is a bit unnerving. But the going is good for the time being. So I don't know if you were to take short calls there. But a lot of people are starting to just book a little bit of profits from the high beta stocks. So you got to keep that at the back of your mind. In light of all of this, what are the stocks that one should be watching out for? I think that's the key question. So ICA Securities will be in focus. It's a stock in a very strong sector currently, which is brokerages. But ICICI Bank is going to sell up to 71.2 lakh shares of the company at a floor price of 440. So compared to the price of 460, it's a discount. But remember, typically when OFSs tend to get subscribed strongly, the stock tends to bounce back as well. It's a stock, as I said, in a very strong sector. So be mindful of this. It will probably start off lower only and then might actually inch up higher. It's happened in the past with some of the larger liquid names like HDFC Life as well. So with ICICI Securities, it could actually happen that it will not stay lower for too long. So be mindful of that. A short trade might not be a good idea here. JSW Steel, and the reason why I'm bringing this up is because of the factors that Sheshagri Rao had told us in the interview. Now, the update that they've given yesterday is that the crude steel production for November was up 3% YOY. This was on average capacity utilization levels of 89% for November. Now, they have said that iron ore unavailability led to why capacity utilization levels were not higher. Now, keep in mind, Donimalai mines have started. and therefore more iron ore will be in the market in the month of December, and therefore all the larger players, if demand remains constant, will actually have better capacity utilization levels in the month of December. And we all know that the prices have been hiked yesterday. So I dare say that this is actually good updates that have come in from JSW Steel, and all of the steel stocks, JSW, Tata Steel, SAIL, all of them remain in focus. Keep in mind, I think the steel rally seems to be alive and kicking. Credit Suisse has come out with a note today saying that they prefer Tata Steel as the top idea and they are bullish on the space at large. So keep that at the back of your mind. Excuse me. The insurance trends, and they bring up a couple of stocks firmly. So I think the private players AP declined on a month-on-month basis for the industry at large, but select companies did very well. So HDFC Life continues to lead. The growth normalized, of course, to 20% versus 40% for the months of September and October. But at 20%, it was way higher than its peers. Max Life had very strong trends for September and October. The growth has moderated to single digits at about 8% on a YOY basis. On a sequential basis, of course, it was decent. But that's the point, that even though growth is moderating, for select players, it's staying high. SBI Life and ICICI Pru both saw a decline. SBI Life saw a decline of 6%. Sequentially was okay. And ICICI Pru continued to see weak growth because it was down 31% for the month of November. Now, all of these viewers are YOY numbers. QOQ basis, I think all of them have done well. So sequentially, the growth is moving up. But YOY basis, the numbers are moderated compared to the YOY growth of October and September. That's the point I'm trying to make. HDFC Life, for example, September and October YOY growth was 40%. November YOY growth is 20%. So on a YOY comparison, it's lower than the months of September and October. But from the growth that they showed in the months of September and October, November is actually inched up. So you keep that at the back of your mind. And HDFC Life seems to have clocked in the best growth. So you have to watch out for that stock in particular. The last one on a stock specific basis is ITC. And the reason I bring this up is it's had a bit of a traction in the last couple of sessions. And Credit Suisse has raised the stock rating to an outperform from a neutral rating. The target is 255 rupees per share from 200 rupees a share. If ITC reacts today, then you know why. It's because of the Credit Suisse note. I do not know if ITC will react. It's a very difficult stock to speak about, really, as we all know. But there is a trigger today. So be mindful of that. Last but not the least, I will leave you, of course, with the data on PSU banks that I told you I will tell you about. Now, the index, the PSU Bank index, saw its best gain since October 2007 in 6 months. And the index ended at the highest level since March. So strong gains yesterday. And for a lot of banks, the best gains since October 2017 when the recapitalization news was announced. It goes back then. So that's the key thing. Now look at the delivery percentages for some of the stocks. I've picked up 4. There were some of the others too, but I've picked up 4 stocks wherein the gains were robust, the volumes were much higher, and as a result of that, the delivery percentages weren't the strongest, 19%, 12%, 25%, 17%. But you would expect that on days when the volumes have jumped up so much. Canara Bank volumes are 4.5 times. When the volumes are so high, then trading activity supersedes investment activity. But something tells you that people have bought the stock and carried it home. And therefore, maybe, just maybe, the gains are not going to be short-lived. I'm not suggesting a trading buy here, but please do your homework. This may not be a one-day pop. Maybe there is more method to the madness. PSUs are anyways in flavor, and this could be more. Now, keep in mind, at 10 a.m. today, I'll be talking to N. Jaykumar of Prime Securities, who will dwell on this topic in detail on the kind of gains that the PSUs have done. So you may want to tune in for that as well. But from a trading perspective, have a great trading day ahead. Thanks so much for tuning in.